Welcome to a deep dive by the Quiet Footnote. Today, we're plunging into a text that has, well, fundamentally reshaped how generations think about money and the markets. Benjamin Graham's The Intelligent Investor. For many of us, the stock market can feel like a dizzying, unpredictable roller coaster, seems driven by emotion, impulse. But our mission today isn't about giving you some magic formula for getting rich quick. Not at all. Instead, it's about arming you with, let's say, a timeless framework for maintaining your financial sanity and your capital in a world that constantly tries to make both wobble. You asked us to unpack the enduring wisdom of this book, really get into its core messages, challenge some pervasive myths, and explore just how relevant it still is, especially now, right, in our hyper-connected AI-driven world.
It is a profound piece of work, truly. Graham, often called the father of value investing. He wrote this not really to transform you to some Wall Street wizard, but crucially, as you'll see, it's more about preventing you from becoming Wall Street's next meal.
Okay, so let's start right at the bedrock then. What was Graham's core philosophy? What fundamental truth was he trying to instill that was maybe missing back then?
His philosophy, yeah, it seems simple on the surface, but it was revolutionary. He essentially drew maybe three bright lines. First, he was adamant. Investing is not speculating. They're completely different activities, different aims, different methods. You got to know which game you're playing. Second, he insisted the stock market is there to serve you, not to instruct you. Think about that. You're the master, not some obedient follower of its daily craziness. And maybe the most powerful point, he argued the biggest threat to your wealth isn't a bear market, it's your own behavior, your emotions, fear, greed. That's the real enemy, not the ticker tape.
Wow, okay.
And building on that, he then sketches out two main paths for investors. There's the defensive investor.
Right, the steady one.
Exactly. Prioritizes stability, keeping capital safe, steady long-term growth. And then there's the enterprising investor.
More hands-on.
More active, yeah. Willing to put in the time, do the research, take calculated risks. But what's fascinating is he doesn't, prefer one over the other. He stresses both demand immense discipline, patience, and a deep immunity to market panic.
Those distinctions alone feel pretty liberating, actually. And for me, thinking about this, a few concepts just jump out because they seem almost counterintuitive to how we often think about markets. What are the most impactful concepts for you? The ones that really stick?
Oh, definitely. If I had to pick the absolute core ideas, the ones that go beyond just finance, almost into life philosophy, I'd say 5 stand out. First, got to be Mr. Market, Graham's personification of the market.
Yeah.
It's genius. This moody, often irrational business partner.
Right, knocking on your door every day.
Exactly. Offering to buy your shares or sell you his. Sometimes he's wildly optimistic about their worth, other times totally pessimistic. The brilliance is you choose when or even if you engage. You don't have to take his offer. That gives you immense control.
Yeah, that's powerful. Second, the margin of safety. This is really the soul of Graham's whole thing. The idea you should never buy an asset unless the price is significantly less than what you figure its real value is.
That cushion.
Cushion, yeah. It protects you against mistakes in your analysis, bad luck, unexpected downturns, whatever life throws at you. It's really an act of humility, recognizing you will be wrong sometimes. Your plan has to survive that. It's your insurance.
Makes sense.
Third, Graham's focus on know thyself when you're deciding between being defensive or enterprising. He completely rejected any one-size-fits-all strategy. Instead, he forces you to look inward. What's your temperament? How much time do you have? Your comfort with risk? Do you value peace of mind above all?
That self-awareness piece.
Crucial. Absolutely crucial for sticking with any strategy long enough for it to work. Fourth, his insistence on the clear separation of investing and speculation. He didn't say speculation was evil.
Just different. Exactly. He basically quarantined it. Said, look, if you must speculate, treat it like going to Vegas. Use only a small bit of money you can afford to lose. Keep it totally separate from your real long-term investing capital. That idea is maybe more relevant today than ever.
I can see that.
And finally, maybe subtler one, but deep. Investing is character training. Graham argues pretty profoundly that success isn't really about being the smartest person in the room. It's much more about patience, discipline, emotional control. It's this quiet, constant challenge to your ego. It demands a kind of inner strength the market rarely rewards immediately, but absolutely requires over time.
It really sounds like Graham wasn't just looking at charts and numbers. He was observing human behavior in the market and trying to fix something fundamental there. What were the specific problems, the dangerous assumptions he saw people making that this book really aimed to correct?
Oh, absolutely. He saw this dangerous gap Not necessarily a lack of information, even back then, but a deep lack of discipline, perspective, and just a clear idea of what investing even meant. One huge problem was the just rampant confusion between investing and speculating.
People thought they were doing one, but were actually doing the other.
Precisely. Most people thought they were investing, but they were really just making emotion-fueled bets on where prices might go next, chasing tips, following the herd. Graham wanted to teach that real investing is grounded in solid analysis, protecting your principal, and aiming for a reasonable return over the long haul, not a lottery ticket.
Okay. What else?
He also went right after the human psychology problem. Markets get dangerous not just because prices move, but because we humans overreact. We get paralyzed by fear when things drop or swept up in greed when things are booming. He saw this urgent need for a framework, a mental model, to help investors handle their own emotions.
Like a mental toolkit.
Sort of, yeah. And then there was just a stark lack of any real risk management framework. Most people had no concept of a margin of safety. They were buying things at prices that offered zero protection if they were wrong, or if something unexpected happened. Graham wanted to give people principles to survive mistakes, not just hope to avoid them.
Makes sense. You need that buffer.
Definitely.
Totally.
And finally, a big issue was this lack of a clear identity as an investor. People didn't know what kind of investor they were or what strategy really fit them. They just jump on the latest bandwagon.
So the defensive versus enterprising helps there.
Exactly. It gave people a way to self-assess, to align their strategy with who they actually are, their temperament, their available time, their skills. He was basically trying to bridge that huge gap between market hype and sound judgment, offering a philosophy to protect both your money and, honestly, your sanity over decades.
So he wasn't just handing out advice. He was really trying to rewrite the rules for how ordinary people should approach the market. What were some of his truly revolutionary ideas, the ones that really went against the grain then, and maybe still feel a bit radical today?
Oh, he quietly rewired so much. One of the biggest, I think, was his insistence that investing is owning a business, not just trading a stock ticker.
That shift in mindset.
Huge shift. It wasn't just words. It forced you to think differently. Move from chasing prices to analyzing the actual underlying company. That directly challenged the whole speculative culture of just flipping stocks. Then there's declaring the margin of safety as the central law of investing. That was revolutionary because it completely rejected this ego-driven idea that smart people can predict the future.
Which everyone tries to do.
Right. Graham basically said prediction is folly. You don't win by being a fortune teller. You win by buying so well, so far below intrinsic value, that you can survive being wrong. It's about survival first. His Mr. Market concept, too, radically separated price from value. By making the market this emotional character, he attacked the idea that the market's price is the truth. He showed value is independent of that daily noise. The market serves you. You don't serve it. That broke the spell, gave individuals permission to think for themselves.
Instead of just following the ticker.
Exactly. And his push for self-awareness over one-size-fits-all strategies was groundbreaking. Wall Street loves selling the same dream to everyone, right? Graham said, no, figure out your temperament, your time commitment, your skills. Choose based on that. He made investing personal, psychological. The right strategy for me might be terrible for you.
That's actually very empowering.
It is. And lastly, his way of treating speculation as this fenced-off activity. It was remarkably pragmatic. He knew people would do it. So instead of just saying don't, he said, okay, if you must, understand what it is. Use play money. Keep it separate. He gave it boundaries, protecting the serious capital. Really, Graham's big rebellion was shifting power away from the chaotic market and back to the disciplined individual. Not through speed or cleverness, but through patience, humility, and thinking for yourself.
And beyond these big ideas, it sounds like Graham also really enjoyed busting some popular myths, taking a hammer to common Wall Street wisdom. What were some of the misconceptions he just couldn't stand?
Oh, he had zero patience for the romantic, often dangerous stories Wall Street loves to tell. One he hammered constantly was, the market price is always right.
The efficient market idea?
Right. Graham's response was basically, are you kidding? The market is often irrational. It goes wild with optimism and manias, gets brutally pessimistic and panics. Price, he'd say, is just an opinion, often a flawed one, never a fact.
Okay.
He also took on higher risk equals higher return. Graham fundamentally disagreed. He argued superior returns come from buying assets for less than they're worth. That margin of safety, again, not from chasing danger. High risk without that cushion just leads to ruin.
So it's not about taking more risk, but smarter risk.
Precisely. Smarter risk, which often means less risk because you bought so well. Another big one. You need to predict the market to succeed. Graham thought this was not only unreliable, but importantly, unnecessary. He was convinced sound analysis, discipline, patience that beats crystal ball gazing every time. Focus on what you can control.
Like your analysis and your behavior.
Exactly. And he was passionate about correcting the idea that speculation is the same as investing. For Graham, investing needed analysis, safety of principle, adequate return. Speculation, that's a different game entirely. Keep them separate. Quarantine your speculative funds.
Got it.
He was also pretty skeptical about professional managers always know best. He pointed out often that many pros underperform, charge way too much, and are just as likely to chase fads as anyone else.
They're human too.
They're human too. Their interests might not align with yours. And finally, he fought hard against volatility equals risk. Graham saw volatility as just noise. The market's mood swings. Real risk for him was the chance of permanently losing your money. If you bought with a good margin of safety, price dips aren't threats. They're opportunities.
That reframing is huge.
It is. He wanted to free people from these myths, let them act with clarity and courage, not just follow the herd.
It's genuinely amazing how a book from that era still feels so current. But what makes The Intelligent Investor maybe even more urgent now, especially with AI, social media, this flood of information?
You know, if Graham beamed into 2025, I think he'd just let out this long sigh looking at meme stocks, TikTok financial gurus, AI trading bots promising impossible returns. His ideas are so relevant because fundamentally human behavior hasn't changed. Market volatility is timeless. Tulip bulbs, dot-coms, crypto, it's the same script. Greed and fear, just wearing different clothes.
The technology changes, the emotions don't.
Exactly. His ideas aren't just relevant. They're like critical survival skills now. Think about the noise problem. It's multiplied like crazy. We're drowning the data 24/7. The discipline to actually ignore most of it, to filter, that's incredibly rare and valuable now. How hard is it to focus on fundamentals when your phone is screaming headlines?
Almost impossible sometimes.
And Mr. Market has gone global and viral. He's not just knocking on your door, he's screaming on Reddit, influencing billions in hours. The ability to step back, think independently, resist that herd instinct. It's not just wise, it's essential. Plus, speculation is easier than ever. Frictionless trading apps mean the casino is always open, right in your pocket. Graham's demand to strictly separate investing from speculating, more critical now than ever. It's guardrails for yourself.
Against impulse.
Right. And the margin of safety is the ultimate antidote to today's volatility. Prices swing wildly on news, algorithms react instantly. Overpaying for the next big thing is incredibly risky. That margin of safety is your shield against shocks, human or machine-driven. Ultimately, it still boils down to temperament over technology. We have way more data, fancier tools now. But the winners, they still have the patience, the emotional control, the plan.
The human element.
The human element. Tech changes. Folly doesn't. If Graham updated the book today, I bet he'd add chapters on the psychology of information overload, filtering news, resisting knee-jerk trades. He'd definitely tackle social media, herd behavior, and AI. He'd probably say use it for efficiency, sure, but never outsource your judgment. AI can crunch numbers, but it can't gauge fear or predict panic.
That's a really sobering perspective on today's market. Okay, this has been incredibly insightful. So if we had to boil down all this wisdom, Graham's legacy, into 5 core principles for someone listening right now, what would they be?
Okay, the 5 essential drops of Graham wisdom to internalize, like your investing compass. 1. Margin of safety is absolutely non-negotiable. Always, always buy with a significant cushion between price and your estimate of value. It's your insurance, period.
Got it, number 1.
2. The market is your servant, not your guide. Mr. Market offers prices, he doesn't offer wisdom. You decide when to act. And most of the time, the smartest move is just to ignore him.
Ignore the noise.
3. Know your temperament. Be brutally honest. Are you defensive, wanting peace and steady growth, or enterprising, enjoying the research, okay with calculated risk? Choose the path that fits you. Don't try to be someone you're not.
Be authentic in your approach.
Exactly. 4. Separate from speculation. Speculation isn't evil, but it's a different game. Keep it small, keep it separate. Use money you can genuinely afford to lose. Don't mix it with your serious long-term capital.
Draw that line clearly.
Crystal clear. And 5. Temperament beats intelligence. The real edge isn't being a genius. It's having patience, discipline, and the emotional strength to stay calm and rational when everyone else is losing their minds.
Control your emotions.
Control your emotions. That's the core. If I had to summarize the whole book in one sentence, The Intelligent Investor is a timeless guide to building wealth by thinking independently, mastering your own emotions, and always buying with a margin of safety so you profit from the market's folly rather than falling victim to it.
That's a fantastic summary. Powerful. But digging a bit deeper, for you personally, is there an unheard message in the book? Something quieter, maybe more philosophical, beneath the financial
Oh,
advice?
absolutely. I think so. The book looks like an investment manual, right? Charts, analysis, strategies. But the subtext, the real heartbeat, is about character. It's about developing patience, humility, self-awareness, restraint. Graham seems less concerned, ultimately, with turning you into the world's greatest stock picker than with forging you into someone who simply cannot be shaken out of their long-term plan by fear or greed or just the constant noise.
Building resilience.
Exactly. I think the unheard message is this. The truly intelligent investor isn't necessarily the one who beats the market every year. It's the one who builds a temperament so steady, so resilient, that the market, in all its chaos, simply cannot break them. It's kind of an invitation, really. To detach your ego from your portfolio's short-term swings, accept you'll make mistakes, and see investing as stewardship. Stewardship of capital, yes, but also stewardship of your own decisions, and crucially, your own emotions.
What an incredible deep dive. Really got to the heart of a true classic. So hopefully you listening now have a much clearer understanding of Graham's core philosophy, the problems he tackled, those myths he busted, and why his wisdom feels, well, maybe more crucial than ever today. And as you reflect on all this, maybe think about how these principles, margin of safety, knowing yourself, controlling emotion, ignoring noise, might apply beyond just the stock market. Could be in a creative project, a career move, maybe even just navigating relationships.
That's a great point. Graham's real lasting lesson isn't just how to make money, it's more like how to stay whole while trying.
Hmm.
And that teaching, you'll find it fits just as well in a recording studio or at a writer's desk or anywhere you face uncertainty and need discipline as it does on a trading floor.
Thank you so much for joining us on this deep dive. We really hope this exploration empowers you to think a bit more independently, manage your own reactions, especially in this noisy world we live in. Until next time, keep digging for that deep understanding.